How's it going? I'm Ryan, and today I'm going to go over how you can use volume to improve your trading. The things I'm going to go over in this video are not very abstract, they're all pretty common amongst traders, and all I'm going to go over is price action combined with volume and how you can use that to your advantage when you're trading. A lot of these concepts are covered in the book A Complete Guide to Volume Price Analysis by Anna Cooling. It is a book that I highly recommend if you're taking trading seriously. You can get PDF online, or you can buy this physical copy from Walmart or Amazon or wherever you might find your book. That book goes over these concepts more in depth, and if you want to learn more, I recommend it. It's a worthy investment if you're trading. But I'm just going to go over briefly some examples. I have 3 screenshots that I took of NQ, all from the 5-minute chart. And I'm just going to walk through them and show you how you can look at volume and price and get an idea of where price action might go to give you more confidence in your trades. If any of this is helpful to you, if you learned something new, I'd appreciate a like, a comment, a subscribe. If you aren't already, that lets me know that this content is valuable and it helps out my channel. So thank you very much. Let's dive into it. So we see the price action here. We see the day we open, we're pretty weak. We're selling off. If you look at the points on the side of the screen, we're dropping hundreds of points. Pretty big sell-off. We see these large red candles here and here, this one and this one, and we see that they have high associated volume. That makes sense, right? Think of volume as it's just participants. If I buy 1 share of a stock, it's not going to move price much, and it's not going to reflect on the volume very much. But if a large institution is buying or selling millions of shares, then that's going to be reflected in both price action and volume, right? So volume gives you a bit of an inside look into what the big institutional buyers or sellers are doing at certain price areas. And when you use a time-based chart like a 5-minute, each of these candles represent a 5-minute interval in time. But what differentiates them is the volume that they're associated with. So if you see a large spike in volume compared to other candles around it, that tells you that there's a lot of selling or buying going on in that price action or in that 5-minute period. So let's take a look. We start with a big red candle. We have pretty high volume. From there, we kind of slow down. We're not dropping as rapidly. We move sideways a little bit, and we have low volume. That makes sense, right? We don't have a ton of selling happening here, so it's not pushing price down super fast or as fast as it was prior. But then we see volume ramp up, right? We see that increase in volume, and what do we see? We see price drop pretty dramatically. That makes sense. As more and more people are selling, that price is going to drop faster. Hope this is pretty clear. It's pretty, it makes sense. It's pretty logical. We come down to this point, and this happened to be the low of the day, and we get a reversal, and price starts to move up. But without looking at this price action to the right of this point, we can tell that this might be a potential bounce based on price action and volume. So let's take a look. What happens after this large red candle? We have high volume, we have a big selling candle here. The following 2 candles are smaller spread, and what happens? Volume starts to drop pretty rapidly. That should tell you one thing, that there's less people selling at this point, right? There's less people selling as indicated by volume compared to previously, and price isn't falling as rapidly, telling you that the sellers are slowing down. They're not selling as aggressively. Here we have a hammer candle at a level of support, and what happens to volume? Volume spikes up. This should tell you that selling has slowed down. We see our first bullish candle of the day and an associated spike in volume, showing that less people are selling. Then we get a nice green candle and a spike of volume, showing that more people are buying here. The next candle is a bit bearish. We have a long upper wick, we close weak, but look at what volume's doing, right? It's pretty low. In fact, it's, I think, the lowest volume or the second to lowest volume that we've had the entire morning. So compared to the previous candle, we have a bullish candle, high volume. We have this weak candle, but it's on low volume. And we look at the next candle. High volume again, and a nice green candle moving to the upside. So this should show that that selling has slowed down both in price action and volume, and then we get that reversal, and that's validated by price action and volume, right? Now let's take another look as we continue to move along the day. What do we see here? We see this big move up, and then we see price action start to slow down here before we get a little bit of a pullback. Well, we can see that pretty clearly in the price action, but that's also reflected in the volume. Look at the volume down here. Look at compared to over here. Now, the beginning of the day is always going to be a little bit higher volume, but you want to compare volume relative to the candles around it. So we have pretty high volume on this move up. And then as we come up and price action kind of starts to slow and round over, we see low volume. So not as many people are buying up here, right? We get a pullback. And I want to pay attention to this. As we're pulling back, this volume's pretty low in here, right? In this area right in here, we have pretty low volume. But what do you notice? We have increase in volume, increase in volume, increase in volume. And what happens? We start to see price drop, but the volume is pretty low. Then we get essentially another hammer right here, and that's on increasing volume. And we get a big pop in price on even higher volume, and then we get a move up. So as price is dropping, there's not much volume. That should tell you that not too many people are selling here. As price starts to hold and look bullish, we get a rise in volume, showing that there's more people buying than there are selling in this area. And then we see that reflected in the following candles as we move up in price. I hope this is pretty clear. I'll go over two more examples, and I think it will be clear by the end of this video, but I want you just to pay attention to prices dropping, but then we start to see price slow down, volume slow down. We see a reversal pattern in the candlestick. We see high volume associated with that, and then we see high volume in the candle that moves us out of that price range, out of that support, and we get a bounce. Likewise, we have a bit of a pullback. That's on lower volume. As volume starts to pick up, we start to look bullish again and price moves up again. All right, let's take a look at a few other examples. Here we are, same thing, NQ 5-minute chart. Now, I want you to pay attention to this. We open, we're pretty bullish, right? We're moving up. We only have one red candle, but overall price is moving up pretty aggressively. We have a pullback here. And if you look at the points, we're going from like 270 to 170. That's a big move. That's over 100-point drop right there. How could you, maybe you're watching this price action and you see it so strong and you say, I want to get long in here. But then price drops and stops you out. How could you have a little bit of insight that there is weakness in this area? Well, let's take a look at the volume. What is volume doing? So we see volume's pretty high, and you see volume increasing as we're getting this move up. But as we approach this area, what happens? Volume starts dropping, right? It goes lower, 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 and that kind of coincides with the top of this move. Then we see a higher volume, and that is associated with this first red candle. And then we see high volume here as we get a big drop, right? So you can see that the strength in this move is starting to die out, and that's indicated by the volume, right? We're not seeing a rise in volume, we're seeing a drop in volume. So that strength is less than it was, previously. We're seeing less and less people buying, and we see that price start to reverse. Now we get a massive hammer candle that is a pretty large lower wick, and we see price kind of hold this price point and start to move back up again and form a new high on the day. I want you to take a look at volume as well. We see high volume here. That makes sense because we get a big red candle. But then we get a big hammer and high volume as well. And then we start to see price move back up. So when you see price action and you see high volume associated with it, it's likely to go, price is likely to go in the direction of that candle with associated volume. Likewise, if you see price moving up but volume dropping, that should be a warning to you, right? That shows that price is still moving up, but less and less people are participating in that. There's less and less strength in that move. So you see that here, right? Price moves up, but the volume is dropping, and then we get a pretty big pullback. Then we get a big spike in price as we come down and hold this area. You see this lower wick here, we form a hammer here, we form a bit of a hammer here, and then price starts to move up. So I hope that makes sense as well, right? The other example previously, we saw price slowing down, pick up on a reversal, and then we see that price reversal as we bounce. This next example is the exact opposite, right? Volume is slowing down as we come up, and then we get that pullback. All right, let's move on to the third example. This is the third and final example, and I think this should be a little different than the previous two. So the previous two examples showed reversals in price, where we had price moving down in the first example, then price action slowed down, volume slowed down, and we got a reversal to the upside. The second example was price was moving up, but the volume started to drop, and then we got a big pullback. This is going to be more of a trend, and we can see the strength of a trend with volume as well. So not just reversals, but also the continuation of trends. So the day opens and we get a huge sell-off, right? We have high volume, prices dropping fast, we look weak. We get a bounce, and I want you to pay attention to both price action and volume. Price action is showing weakness because we have these long upper wicks showing that price tried to move up, but sellers brought it back down, right? And while price is still moving up, what do we have? Low volume, especially compared to the previous two candles. These selling candles were really high volume. We get a little bit of a bounce, but price action's pretty weak with those long upper wicks. And look at what volume's doing. It's dropping. Then we sell off again, right? Continuation of that weakness. Then we get another bounce. So let's take a look at what happens, right? Volume is dropping. Volume is dropping as we start to move up. And then what happens? We sell off again. Now, we kind of formed a double bottom here and then reversed. And you can kind of pay attention, right? So we see a bullish engulfing here at this reversal. We see higher volume. That validates that. Price is validated by volume. So we see price start to bounce, but we don't see the volume that we'd want. Now, if price was moving up and we saw super high volume, that would indicate that a lot of people are buying. But we don't get that, right? We get kind of weak price action and we get weak volume. So we know that it's not going to reverse here. It's not going to just go right back up and start making higher highs. And we can see that, like I said, in both the volume and the price action. And then we get that continuation of the downtrend. We start to bounce, but guess what? Volume is low. So we're not going to see that and think, well, this is the bottom. We're going to, keep going and price is going to just rally to the upside, because there's not enough people buying to support that. And then we see, what do we see? A rise in volume as we start to sell off again. Now, you can see that we kind of bottom out, or not kind of, we bottom out here, form a bit of a double bottom, and we do get a bigger move, and we break both of these swing highs and make a move higher. From there, we kind of chop around and make our way back down. But how would you notice, or how could you tell, say you see this selling, you see this weak price action to the upside, more selling, weak price action and volume to the upside, more selling off. What could you realize about this price action and volume to indicate that maybe the selling is slowing down as well at this point? Well, we have these long lower wicks indicating that price tried to get pushed down and buyers pushed it right back up. We also have pretty low volume in here as well. So this isn't indicating a lot of weakness either. Then we have a big bullish engulfing candle followed by a rise in volume, and that starts this bit of reversal. So I hope this kind of explains how you can use price action and volume to get an idea of where price is going next, right? If you start to see price moving in a certain direction, but the volume is dropping, that's an indication that that move isn't it's not valid. It's not substantial. You're not seeing a ton of people stepping in at that price point. I hope this makes sense. Those are the 3 examples I have for you. 2 reversals, one showing a little bit of trend continuation. If you have any questions, please leave them below. Like I said, this is just a brief overview. It's not always perfect, but as you start to pay attention to these things, you'll start to see them more often. And you can use this in any time frame. I think 5-minute is a good example, but you can use it on the 2-minute chart as well. And when you combine price action and volume, it gives you a little bit of an insight into what the market wants to do. And that's because you're seeing what institutional or large buying and selling is doing. If a lot of people are buying, price is probably going to go up. If a lot of people are selling, price is probably going to go down. If you see price moving in a direction, but it has very low volume, that means that not very many people are supporting that move, and it's not very strong. You shouldn't put your money into that. Like I said, if you have any questions, leave them below, and I'll try to answer those. I hope this helped clear some things up. If you like the video, leave a like. It helps me out. I'll be back to doing trade recaps. I did not trade this morning, and that's why I'm doing this tip and trick video, because I didn't have a trade to review. But we'll be back on it Thursday and Friday. I'll be live streaming both Thursday and Friday, and then I'll make trade review videos if I happen to take a trade. That's all I got for you. Thank you for watching. Have a great day. Peace.